All right, guys. This is Steve Greger here, otherwise known as the FX Coach, and I'm the creator and main administrator of this group, iMarkets Live Scans, Forks, and Fibo. It is a public group. I've not discriminated in any way for anybody to join this group unless they have absolutely nothing going on their profile. They're not a member of any group. They don't have any posts. They have one cover picture and that's it. I'm just going to try and protect us from a lot of nonsense by not letting those people in. But for people who have shown some interest in the financial game, that could be Bitcoin groups, that could be other Forex groups, that could be stock trading groups. They're welcome here because I'm assuming they're just exploring a little, which is always a good idea. And so, of course, my goal would be eventually to show them that the Forex is the way to go. And if they're going to do something with the Forex, that, in some capacity, my trading team is maybe the approach they want to take. But we don't discriminate in any way. Everybody in here is blind, in regards to all the help you get in here is blind into the regards as to who you are. For most of the names that come up, we don't know how much you have experience in trading, how much Forex experience you have, whether you're a member of IML or not. We don't ask any of that stuff routinely. We just help those who are asking for help. But I have to bring a little distinguishing point to that um, because the group was, part of its mission, part of its charter is to indeed to provide support for IML traders who elect within the realm of what a trader can pursue, are interested in pursuing scans, forks, and fibos in their IML trading. As you know, we feature the IML scanner in here as our principal scanning tool. So we're not drawing these scans. While you can, and trading view charts, which we recommend, allow you to do that. While we can, our preference is to use the auto scanner capability that's provided. The second thing, of course, is pitchfork mastery. Now, that's my gig. I've been trading pitchforks for over 10 years now. I've been through the major training from all the great gurus and mentors that are out and available in the marketplace at great expense, both time and money. And I've been able to ascertain over thousands and thousands of forks what element of pitchfork trading is actually applicable and valuable to you as a trader in order to make profits. And so I can teach pitchforks. I have a pitchfork course, and we'll talk more about that in a second. So in general, we have three kinds of people, and as a rough spectrum in this group. One of them being somebody that's an IML trader. The second one is the non IML trader who has already been pursuing the Forex. And the third, somebody that's just kind of, testing the water, if you will. They don't know how to trade the Forex per se. They maybe have made up their mind they want to learn, or maybe they're just doing a little exploratory work because they're active in other forms of financial gain. As I said, be it crypto, be it binary, be it stocks, etc. So three types of people in here in general. Um, to kind of help and motivate and instruct, there are some videos in the pin post for those that are existing Forex traders and those that are IML traders who may want to pursue Forex. And some of those videos are pretty powerful in that they discuss the real motivation I had to originally trade pitchforks, and that is they are a new paradigm way of trading. I can have very tight stops, which afford me very low risk, very high return. To the point, if you watch those videos, you can see a good pitchfork trader will make 5, 10, 15 times the amount of money in the very same trades as a traditional Forex trader. Traditional Forex traders are taught and groomed in what I call the old paradigm. Lagging indicators, bigger stops, a mental struggle, a lot of on your own effort. And it's very hard to be successful in that realm, which is why 95 to 97% of traders don't make it. So, where the new paradigm comes in is tighter stops, higher dollars, the highest dollar per pip, gain in the forex market, a better head game because we're dealing with low percentage risk and higher yield, and very profitable. And so it makes sense. So in those initial videos, whether they include a scanner or not, as to get you interested, it's about understanding how risk works in a trade, how the money management works, and how stop loss dictates the profit in the trade. To that extent, I have made Trade Calc available. So there's a post in here that says, here is your access to Trade Calc. I would search that out and use it. Inside Trade Calc, which is a lot position calculator, you could actually do side-by-side comparisons. Hey, I'm entering this trade, with a 50 pip stop loss, with a 100 pip stop loss. And, let me compare it to Steve's group using Pitchfork's technology and new paradigm technology. And let's say they're using a 10 pip stop loss. Let me see the difference in profit both of us are going to make. And so, you'll be able to do your own comparisons. It won't have to be me stating it. You'll be able to observe it on your own using the formulas that are tried and true for determining lot position sizing and then the resultant impact they have on profit. Now, some of you have maybe been noticing that your monitor is upside down. I did this presentation specifically for the Australians, so they'll be able to see this correctly. Yuck, yuck, yuck. Just seeing who's paying attention. Yes, I know what I'm doing, and yes, the image has been rotated just to kind of play with you a little and to see if you're paying attention. All right, so we have three groups, as I said in here. The people that are here just, kind of look around. This isn't a Forex 101 group. I hate to say it. You're welcome to stay. You're welcome to watch what we do, but you're going to have a hard time following. And that's because the training for this occurs outside this group. And there's two forms of training. One is a Pitchfork course that I've been selling for years based on my 10 years of knowledge. And information about that course is now available in the pinned post. So if you want to get up on the Pitchforks and you want to use them as a vehicle for trading because they're a new paradigm way of trading, because they give you 5, 10, 15 times the profit in the same trades that your peers may be making, and then of course when that gets compounded over 5, 10, 15 trades, it's ridiculous. So maybe you'll see some motivation to want to use Pitchforks. So there is a place you can go at a reasonable price and get Pitchfork training, for which then you'll be supported in this group. Now that's particularly for non-IML traders. All right, if you're in here and you're not part of IML. IML traders right now get that course free. That offer is going to go away pretty soon. But I've bonused the IML members that attend my iMarkets Live TV, IML TV, Scans, Forks, and Fibos group, or session or channel, whatever we want to call it. For those that attend that, I've bonused them my Pitchfork course free. Eventually, I'll have that content in what is known as the IML Academy, so they won't have to leave the IML realm to get that Pitchfork trading. Right now, Pitchfork trading is not part of the IML curriculum, but Christopher Terry and Jason Brown and others recognize what I've been doing and have sanctioned me to come in here and teach Pitchforks. But I will make that course, an updated version of that course, in IML Academy, definitely before the year end. I can't put a time frame on how soon, but definitely before the year end. In the meantime, that course is available for IML traders, free of charge as a bonus for attending my live TV sessions. So, if you're now, what you'll also note, if you're kind of just a casual observer in this group, is that we're using more and more and more harmonic scans. And there's a lot of reasons for that. A lot of it has to do with how the scans are constructed, what it takes for the scanner to actually paint a scan, and why certain elements of that scan have higher potentiality for reversal than just any other normal high or low, any other normal swing high or swing low. So I've incorporated Pitchforks and scanners and Fibo work into kind of one hot zone kind of product. So we had a trader not part of IML who, asked a very legitimate and innocent question. about this particular chart. And the question essentially goes like this, because we know this to be true in the trading world. You will have trainers with education, with signals, with, PAM accounts, etc., trying to demonstrate capabilities, and they do it where they put up stuff and say, hey, look what I did. So the question this morning was about how, was there actually any profit in this? Or was it just drawn after the fact? Now I understand the conditioning you've been subjected to in the internet world, especially within the forex realm, that would have you ask that cautionary statement. And again, as I said, I believe it's a legitimate and fair question to ask, and so I'll explain it. What that individual, and most of you are missing, if you've not taken my course and you're not in my live sessions, what you're missing is the fact that what I routinely do is talk about how to draw pitchforks as price is moving along. And so we have some price movement, and again, I'm just exaggerating, a very flat kind of movement. And what I say to do is, when you come on the charts, let's say you came on the charts at this point in time, what I say to do is to immediately draw the last two swings. And that would mean you would draw a pitchfork facing down based on, not that you draw score pitchforks, you draw pitchforks with lines. So I would ask you, and again, I'm not going to try and line stuff up. It may or may not be coincidental. I'll just make it match that just for yucks. I ask you to draw forks for the last two swings. One, the swing low to swing high, and then a swing low, then a swing high to swing low. So in this case, we have the swing low to swing high. And again, as a repetitive nature in here, what I want to say, well, I don't know why I dropped the line tool there, excuse me. As a repetitiveness feature, or as just a point of emphasis by repeating it, when we have a swing low to swing high, and what I mean by that is the first swing we encounter is a swing low, and then that goes to a swing high, that fork has to point down. That fork has to point down, and the reason for it is pretty simple. This is called the swing high. Why? It should be the highest price in that region. We don't achieve a swing high and then go, well, I expect price to go higher. I'm not saying it can't sometimes, but that would be a disqualifying fork if it does. So if I have a swing high, I'm expecting price to go down because this swing high should be a reversal point. And so from a point of neutrality, that price has to leave anywhere beyond the level of that swing high. We don't want it going above that. We don't want our fork pointing above it. And we really don't want our fork pointing exactly level. There has to be some slight angle, and it might be more, and it might be more, and it might be as much as this one. But there has to be a downward angle from a swing high. So I ask the traders that I teach in my pitchfork methodology when it comes to applying forks to your charts, is it makes good sense every time you have a major swing on the time period you are trading, and fork can be used on any time period. On the time period you're trading, it makes good sense to draw a fork in each swing direction that exists right immediately before you got on the chart. So what that means is that red fork there would be drawn from that swing low. Come on, where's my pen? From that swing low to that swing high, it would point down, and where we put the median is going to depend on whether there was a swing high here that we could put it to, because a swing low to swing high goes back to the previous swing high for the median touch. If there's something here that makes sense right away, there's a nice touch here, then we would use that. If there's not a nice touch, we can't trade this fork right away, but we're going to move this up and down over time until we do get some touches. If I come on here at such a point that there was a big move down, and right in here there was a nice wick making a perfect touch, then my initial positioning for this best fit fork would include that touch. and then I'd let time move on. If it's a 15-minute chart, this might go a couple hours before I get some more touches. And once I get 2 or 3 touches to the pip confirming this fork, it then becomes tradable. It may never offer a trade. I might not ever, the traditional may not work. The best fit may never have any good alignments. I can't contain the price using this swing low and swing high. It may not work, but I draw it. If I get on the chart here, I draw this swing fork. Now, the other thing I do if I got on there at that time is, I draw my upward fork. And that would be based on this swing high and this swing low. And again, maybe initially I just take it back down to this swing low and call it a traditional and see what happens. Remember, if we got on here at this white squiggle line, price has just left this swing low, so we don't know where price is going yet. But if I have a nice point back here I could take it to, I could set that as a traditional for now until price either determines that this is going to be a good alignment for the fork or it's not. So what happens is, the question this morning also include, it seems like the forks are randomly placed. That's because the ones that didn't work or didn't have any traps in them or couldn't be drawn, I don't have drawn. They've been removed. They're no longer in consideration. So right here, if I came on the chart at this point in time, I would for sure have those 2 forks. Now, depending on what happened to the left in history, there may be 1 or 2 forks in front of this. Eventually, what you can see in this space where I have, let me make it darker, where I have this pricing information, I've got very tight movement. I don't know just yet. There may be a major trend in front of all this that is upward pointing. If I used something other than black, that may be upward pointing and includes both my forks, the one pointing down and the one going up. There may be something bigger there. There may also be a bigger fork that represents a downtrend that includes all of the stuff in my current field of view with those 2 forks that I just drew. So price has to kind of leave these 2 forks up or down, for me to get a sense of what's going on. But if I come on the chart right here, in this time frame, there may be a big channel that precedes the possibility for this swing down and or this swing up. So I would want to go back and draw that on the chart. So then I would have 3 forks. The long persisting fork, the new swing high, swing low to swing high pointing down, and the new swing high to swing low, which is pointing up. So that's how we play. And as price moves on, we keep taking that same approach. Every time there's a swing high, swing low, we modify this. If price leaves these forks, I have to adjust a new swing high or swing low to accommodate what's going on, then I do. Maybe the new swing high stays within one of these forks, then I don't need to draw another one. But as price moves on, I'm constantly scanning. Now, if my long-term existing and persisting fork is still at play, then it's still at play. If it leaves the fork, and again, this is advanced teaching, we have additional lines that parallel the fork, and we have additional lines from the fork that go this way. So there's fields of play even when price leaves the fork. Now, these are the things you learn in our course and classes. But as a foundation, I'm moving forward with my forks. So back to the trader's question this morning, this orange fork gets painted, gets drawn, we have a big drop and we pull up and it starts to leave it. So this is not your traditional swing high, but again, my experience, 14 years of trading, I know what's going on here as price continues to move on down. This was just a correction to a big move, and price is still going down. So that can be treated as a swing high. So, okay. So price now comes down here, and it starts going back up. Folks, as you look at that period of the chart, that is a swing high, that is a swing low. I can draw a fork. Now, it doesn't mean much to me at the beginning, but originally, I would have this fork pointing up just a little bit more, because with this big long low, I would go and take my fork there. Swing high to swing low, back to previous low. So my fork at the time I'm in here somewhere would look like that. It would have that would be the median touch. It would still be the midpoint, but you can see it would be a little higher in its orientation at that time. However, as price moves on and we're no longer here, now we're here, my fork experience tells me something. When you have a big long reacher wick like that, I call them scouting wicks, when you have a big long wick and it stops in its tracks and turns around, that means something. So I can grab my pitchfork and make it a best fit merely by pulling it up that little extra distance until this median comes down and smacks right here as the fork now exists. So we always have the ability to constantly adjust the forks. This is kind of why it's new paradigm. See, in the old paradigm, if you established a support and resistance level from, say, a 4-hour chart, that's set. You can't change it because that's the holy grail. Doesn't matter whether price is going to stop there or not. With pitchforks, we don't have that invested. We don't have that, oh, it's set, and now let's see what happens against that set. We're constantly adjusting. Now, I don't mean second by second, tick by tick, but we're constantly, on our time period, we're constantly adjusting the fork to reflect what's going on with price. The swing high and the swing low is not going to change, guys and gals, but this kind of movement up tells me something. First of all, in my pitchfork training, you're going to learn that from this swing low, Alan Andrews, the guy that invented the Andrews pitchfork, has observations over thousands of pitchfork trades, and he states there's an 80% chance from the swing low we're going to get to the median. And so when price rushes up here to get here, it tags it and starts to depart. I know that's a significant point. That's not a trade. So the trader asked, is everything on here? I think that, very nicely, again, it was a sweet question, an innocent question. The trader was asking, in the end, how much did this fork serve? And my response was, what do you consider the end play? And this is what you have to understand as a fork drawer. So what happens now is I get this set. And it's a pretty strong set because of the nature of that. Normally I like to see an inside and an outside hit somewhere to validate the swing of the fork. 2 out of 3. There are exceptions. And the exception is, one of them is when you have this big fast rush and it gets up here and there's a big long wick on the touch. So at the time here, I now have the fork set in the angle that it's set at. And I have high confidence in that wick. So now price comes down. This scan is not on the chart at this point. Okay? So I want the trader who asked the question to understand that. That scan is not on the chart. However, we have another wick kind of situation engaging now the bottom parallel. That is a trade I will take a risk on, only because of the nature of how this was hit. Normally, this is not a trade, because normally I want to see if this had taken its good old time and it meandered up and it was a candle close here, I would require an outside hit to kind of validate the angle of the fork. But we've had brisk movement down, pretty fast retrace up, and then this wick up here is very strong. And again, those scouter wicks, see what they're really saying is, it's like a little, army squad here, and they send a scout out to see if that's an okay. Hey, there's a river there. Is that an okay place to cross the river? So they send a scout out to look. And he comes screaming back, no, don't send the troops there. Let's not send the rest of the squad there. There's an enemy encampment right on the other side. So he duly gets rejected. So a long wick, I call them scouter wicks like that. When they have a hard rejection, that's a pretty good set. It makes this a worthwhile risk in how we trade. See, the second part about what I do with pitchforks is very tight stop losses, which means it doesn't take me much to recover from a failed trade. And because I know percentages are in my lap at this point, that has a 30 to 50% chance of being a hit on a fork that only has one validation point. Why would I take a trade that has a 30% chance of winning? Because when I lose this trade, and again, don't pay attention to me here too much. When I lose this trade, that's only going to cost me 3 pips. Now don't ask about how I do that. That's part of my training. But that's only going to cost me 3 pips. If I win, what's the move even to a half channel? What's the move to the full channel? And so I do my risk analysis at that level. These are 20 pip channels right now, as you see it. And so if I go from here to here, we could count the pips that are available. 10, 20, 20, 40, 60, 80, 100 plus. So if I only win 33% of the time, but when I win, I make 100 pips, do I care about the other times that I lose and I'm losing 3 pips in each one of them? See, this is understanding risk reward combined with probability. I like trades that are 80% and higher. Okay, that's, I love that. But can I at certain times take a lower scaled or a higher risk, higher probability? The risk is still low. It's only 3. It's just I know when these hit, they go long ways. All right. So for me, in my experience with trading forks, and I want to get you guys to that same level of experience. So you can't circumvent going through that process. That's, I keep telling people, be patient. Draw your forks. It's going to come along. You're going to see it. Some of you are already doing a great job at having a set of eyes for seeing forks and drawing them. It's incredible what you've done in 2.5 weeks. Just takes time. It takes drawing the forks. Those of you sitting back watching, are struggling on your own and not posting anything, you're going to continue to struggle. You need feedback on these forks. But eventually people get that feedback, and all of a sudden now you're seeing forks start to appear that are looking pretty good, that are getting solid bounces. People going, there might be something to this. Maybe Steve was right. So I have an eye. I can tell based on the swing, the move down, based on the run that this made. You notice there was not, a zigzag approach up here coming down to form this swing low. That was a rabbit race to the bottom. There's not a pullback in there that exceeds, as far as I can look, this one move here had a decent pullback. But for the most part, we're less than 23%, less than 38%. We don't have big pullbacks in this move down. Okay, there's one exception in here. Other than that, boom, 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 boom. So pretty rapid drop. And then we have the big scouter wick on the end of this. So that tells me something when there's a scouter wick there. So I can trust this as a trade. So now, again, to the trader who asked the question this morning, that's a trade. And we have money management to manage that trade, and our target would be the median, because that's generally the target from the bottom parallel. It's the median. Now we have money management. We would be profited out at some point as this pulls back down, but we made good pips on the way. For considering our risk was 3 pips, and we probably gained, 70, 65, 70 pips. So there you go. Now, lo and behold, I have this pitchfork that I just said this was a little bit more risky than usual because I didn't have 2 and 3 validation points. What happens here? There I do have my 2 validation points. I have my inside and outside validation point. That bounce right there becomes a trade. And we would follow our money management, which actually I'm teaching tonight in the IML TV session. We would have our money management there to profit until, we get profited out. So here was trade number 1, and here was trade number 2. And all I did was when I came on the charts, I drew my upward fork because I had a swing low down there. That's not random, guys. That's just good practice. Every time I have an extreme high or I have an extreme low, I'm drawing a fork on it. It may work, it may not. But let me ask you this. If you draw a pitchfork and you never get a trade out of it, how much did it cost your account? 0. If you establish on a 4-hour chart a support and resistance line and you put an entry order on it and that stop gets, or that support or resistance gets overrun, what happens? You lose. See, there's a difference in setting a trap and no animal ever stepping in it than having to go out and hope you can hunt today and find an animal. This is why pitchforks are strong. It doesn't matter the times they don't catch the trades because it doesn't cost me anything. I'm not doing order entries on these lines. I set alerts. So I have an alert that tells me when to consider this trade. As price is moving up, ding, 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 the alert goes off. Now I look at my charts and I look for the bounce. And then I have a trade entry. Maybe price never got there. My alert would have never gone off. What if price comes here after I get the alert and it overruns the median? Then I didn't take a trade. A lot of you newer folks are putting too much into your pitchforks. You're assuming it's old paradigm trading. You drew it, therefore price has to abide by it. Get rid of your ego. You may have to draw 3, 4, 5 pitchforks before you get one that gives you a trade. Big deal. Do you know what? Speaking for the people that haven't been following me or haven't watched the risk movies, if I calculate my lot position here on 10 pips, so I put 2% into a 10 pip stop loss. I'm going to trade 3 as my stop loss, but I'm going to put 2 as my risk. 2% into a 10 pip stop loss. And that trade goes 80 pips. If I'm losing 2% every 10 pips, I'm also making 2% every 10 pips. So that trade that goes 80 pips, I just made 16% on my account. I don't have to catch trades like that multiple times a day. If you caught one trade like that a week without compounding, that's still a 64+% a month return. And if you're trading at 64% a month, you're in the top 1% of Forex traders. This is what's achievable with tight stops. This is why pitchforks are very powerful. This is why it's worth every time you have a major swing high or swing low, you draw a new fork. Now, I'm trading this fork actively. And, I'm not going to lead because, I didn't put everything on this chart because to a new person, it's already very busy. But what happens if I drew the downward fork here? So between this run and this run, what happens, let's draw the baseline for that. What happens at the 50% point, wherever it may be. It may or may not be on that line. I don't want to be prejudiced, but let's just pretend, because it looks like it is, because I know it was. What if that 50% line, as I swung this, as price is now retreating, as I swung this up and down, oh look, it captured the B. I didn't even put that on the chart because I didn't want to have too many forks on the chart. I'm in the middle of an upward fork. I have a pretty aggressive move up. There's my swing high. I'm going to draw a downward facing fork. And there may be hits on that fork while I am still inside the bigger channel. And it just so happens that the D is a median hit on this fork, as well as the bottom parallel here. You just keep moving your forks forward as you draw. Some are going to get hits, some aren't. It's like the old network marketing recruiting slogan as far as, people joining. Some will, some won't, some will, some won't. So what? Go on to the next one. Drawing pitchforks is very much the same. Some are going to hit, some aren't. Go on to the next one. And it's not like the old paradigm where you're so desperate for a trade that you get all emotionally wrapped up in a pitchfork that doesn't work. And you try and fuss with the pitchfork to make it work, and now all of a sudden they have breaches on it, and it's not a good fork, and then you take that trade and you cry because, it didn't work. Well, you took a trade on a fork that wasn't there, and you made it not there because you were desperate for a trade because you're in the old paradigm, trading 50, 100, 150 pip stop losses, and when you get stopped out in a 150 pip stop loss, it takes 150 pips to get back to break even, and that's intimidating psychologically. If I get stopped out in any one of these trades and it's -3, it's -5, even if it's -7, who cares? Because all of these trades are at least normally 50%. The only reason this one was a little lower is because I only had 1 point of validation when I took it. So who cares I go -7, even 3 times in a row, because when I catch the 80 pip trade, not only does it eradicate those 3 stops, it gives me good profit for the bank. See, it's a different mindset when you're trading tight stops than it is when you're trading big stops. I've said many times, the old paradigm works against you. It works against your psychological growth. In fact, it challenges your psychological growth. New paradigm works with your psychological growth. If I only need to gain 5 pips back to make a trade to be at break even, how is that going to be different than if I'm 150 pips down and I got to make 150? Let me ask you this: how many 150 pip trades are there a day? How many 5 pip trades are there a day? How many +5 moves are there on the chart in a day? We could probably talk about in an hour on a given pair. So the loss here, because of the low magnitude of the entry point and the stop, and that's why we want good tuned forks, because I can take to the pip hits. I can have a stop loss out here, and I don't have to worry about it being. If it breaches this, I probably want to be taken out really tight. See, the old paradigm trader used to 50, 100, 150 pip stop losses. They don't understand, because there's a reason you have a 150 pip stop loss. There's a reason for it, and the reason is there's lagging indicators. You have no idea what price is doing when it backs up on you. If it backs up 50 pips, 60 pips with a 150 pip stop loss, you have no idea whether it's going to come back in your favor or whether it's going to take you out. You're clueless. You have nothing to work with you. Rare occasion, sometimes you have those 4-hour support and resistance zones, and even within those zones, they could be wide enough that you just don't have any confidence. This is why the new paradigm is so powerful. Let me continue with this training. So I do have a fork. I do have an entry here for another buy. I have an entry here, which is now a double entry. We call that a double energy point, because not only do we have the pitchfork here, we have the pitchfork, we got the pitchfork here down, and we got the diagonal here. So here was trade number 1, just from progressively putting pitchforks on your chart, not at random. Here was trade number 2. You might have caught this baby B to C move. Now, you would have been taken out here. You would have been profited out. If you had taken that trade down here on this pitchfork, on a median bounce of that pitchfork, you would have been profited out. But you got across the channel. It just continued going, and at some point you have a stop loss. Again, we'll talk about warning lines and how to manage money once you leave the fork. But nonetheless, who cares about being profited out? I caught a trade, and it gave me that many pips even when it backed up on me. Okay? So we talked about so far just writing forks, drawing forks progressively on your chart. You had trade number 1. You had trade number 2. You have trade number 3. Now, C doesn't give me anything inside anything that I have on this at this point in time. So C is a no trade. It's not C at that point. It's just a swing high. None of these, this is not X, this is not A, this is not B. These are just swings that occur inside my existing forks. There's no trade here at C at the time C happens. So I got X to A, I got A to B, and I get B to C. There's no trade here. There's no trade. Now I can tell you how to get pips on that, but again, that's more advanced teaching. So what happens then is price continues to move down, and with the IML scanner, somewhere about down here, maybe this big wick, this scan gets painted. And now we see, oh, no wonder these swings at X and A and B, no wonder they were good trades for me in my pitchforks, because they ended up being part of this scan. So the scan evolves inside the fork I already had on the chart. How long will this fork last? Quite a ways. It's been so strong early on. But the minimum it's going to last is until price somewhere leaves that channel. So we've got a channel defined now from here upwards. And until price leaves it, that fork is at play. That means these Fibonacci lines are at play. And there may be more of them. It depends on what time frame and how we're dealing with it. There may be more of them. It means horizontal Fibonacci's at play. One of the things I've instructed on here recently is in anytime you have a pitchfork, in this case an upward facing pitchfork, you need to come on and draw a line on your, it's so funny because it was like 2 nights before this trade, I talked about that in the live session. Always draw a line on your swing high. Because it will continue to have influence. And we also want to know what that is. See, in this move down, that line now represents a 100% retracement. It's still inside my fork. In fact, it's at the lower edge of it's in the lower half of my fork, but it represents 100% retracement from the C to D move. And we want to know, with Fibonacci, the stuff that happens up there. We call this a fork Fibo. It's essentially an extended retracement. Extended because as soon as you get 1 pip up here, so now you're at 101%, greater than 100%. So we have Fibo numbers for this as well. Just the standard stuff. 1.618, 1.382, 1.5, 1.618, 1.786, onward up. But let's look at what happened here. So what would have happened with this, and again, trading reality, just being, totally transparent. Notice where the pullbacks are limited and how we would have advanced our stop through here. We would have for sure gotten that profit. Depending on how some people do their stuff, they might have had, a lot more profit until this thing came back, because they might have had midpoints on here, like on a fork could deliver. Depends on the width of the fork. This is a wide gap for a 15-minute pair, for a 15-minute chart. That's a pretty wide fork. So what happens here is literally less than 24, 36 hours after I talk about putting a horizontal line on your swing high, we have this price action, and like any really strong support and resistance line, price gapped it. It reached it. Now we say gap, we don't mean it leaves physical space like you would see in candles. We just mean that there was no breathing at that line. Price passes this line and it comes back and checks it to the pip. That means that line was significant. When it comes back and checks it to the pip, that's an entry. Notice how there's no fork entry there. It's not falling off one of the fork lines. We're just using the standard swing high there, extended, of our pitchfork, the swing high from our pitchfork, extended, and we get that to the pip bounce. We gap it, comes back to the pip, takes off, there's a trade. As far as the termination point, at this point, we go to the top, and now we have one fork, which was my original one. We have the up fork, and we'll talk about that up fork because I forgot to talk about that in a second. We have the up fork, and now also, if you just have a set of eyeballs, you'll be able to go back in time and go, wait a second. This is a significant swing low. And you definitely want to have that on your charts. So I should have a swing low on my charts. And so now we have this triple energy point, which would terminate our trade up. It would terminate the buy. But a triple energy point like that would be a great sell. So you'd have to be ready for it. You may not catch it. You give yourself a 5 to 7 pip lead on that channel, on that half channel as an alert. And if this moved really fast, you might not be able to get there. Now this is a 15-minute chart. So these are 15-minute candles. So while it looks very volatile, there might have been, there might have been 15 1-minute moves up to get there. And we'd see it slowly approaching. So the alert goes off and we have 2 more candles to go at the 1-minute chart level. All sorts of stuff to talk about here. Okay. One thing I want to talk about here, and I'm going to bring up something, and I only want you to pay attention to one part of it. And that is this. On TradingView, if you have, like the Pro Plus package, it allows you to have 10 layouts with up to 4 charts per layout. Within that layout, or within that grouping, there's a feature called visibility. So if I draw something on my 30-minute chart, I could see it on a 10-minute chart. I could see it on a 15-minute chart. I could see it on a 1-minute chart. So here's a very interesting fork that was drawn in a traditional. We had a swing high going to a swing low. We came back to the previous swing low and we just drew it and say, hey, let's see what happens. And it just so happens there was a lot of nothingness in here. There were no outside touches. Well, we had this touch here. It breached it by like a pip. Nothing here but a traditional fork, and then you have this bounce. Boom. Now, this is on the 30-minute chart, as you can see. '30-minute chart. That's my 30-minute pitchfork. With visibility turned on, that mark right there at that time, that's what it looked like on your 1-minute chart. Notice there's your median. I can tell you the scale here, okay, because you can see it here. What is this? 141.60 to 141.80. And yet look at what this reduces down to. At the entry point here, I waited for 2 pips of pullback, and by the time I got my 2 pips, it actually turned into 3. So within 3 pips, I was able to get into this trade. But let me ask you this, with perfection, with what I call to the pip, TTP, to the pip trading, do you not see where that hits the line TTP and bounces away? And therefore you can take that trade. And you can take it with a stop loss just 3 pips on the other side of that. If it breaches it, I don't know if it's just going to breach it for a couple of pips or is it going to breach it for 10, like these. Right? So I want to have my tight stop just to take me out. Didn't need it. All right. So that's a good example of how trading tools, in this case, having a set of TradingView charts that have multiple charts in the same group, and I turn on visibility, I could see what I do on my 4-hour chart. I could see what I do on my 30-minute chart, and I could see that all the way down for perfect execution on my 1-minute chart without redrawing or readjusting a single thing. Very powerful. So all of these moves I'm showing you here on this 15-minute chart could be, and for my traders in time, are and will be executed on 1-minute charts. So this point of clarity becomes even stronger, which is why we can have a very tight stop loss on the other side of this. So this would be a trade, and you would get those pips. And again, initially your stop loss, by the time you got down here, maybe you do move your stop loss to here, and so maybe you do just get the pips to that point because it retreats on you to that point. But what did we get? We got X to A, a little shy of that because we have pullback that we have to exit on. We have A to B, shy of that because we have to give up some points in erosion to get profited out. We had B to C, shy of that because there's going to be some erosion, we get pulled out. So we get those pips, and we get those pips, and we get those pips. We didn't get C to D. There was no signal, no way we could trade that. And then D, again, different money management styles, but at a minimum, you would have had those pips. So you would have had those pips. And then up here, you would have had those pips. Nothing random in what I just drew there, guys. Nothing random. All this came about is by drawing the forks you should. Now, one last comment. Not only should I draw this fork right here, the C to D fork, at the time it occurs. Not only should I do that. And again, I know that's going to be a very powerful fork to draw because the D, if you will, is already on this fork. So don't anticipate that the pattern, see, a purist understands something about this pattern. The purist understands that the whole reason for this pattern is to generate the D, and in this case, this is a bullish pattern. So it's going to generate the D to give me a trade. That's the whole purpose for a purist on the scan. That's all they're looking for. As a pitchfork drawer, I am having my pitchforks move ahead with me as price moves. I'm drawing my forks in opposing directions as price moves forward until it leaves the boundaries of one of these forks. Then I could drop that swing low to swing high, and maybe there's a move here, and it goes, and so now I have one maybe up here. I just march them forward as time moves on. There's nothing random. It's always marching the forks forward as price moves east. And you will catch these trades. Finally had someone post last night, this happened to them, and I saw the elation. They had a fork, they were tuning it, and lo and behold, the scan appeared right in the middle of their fork with some touches on the scan. That's what happens if you keep marching your forks forward. As long as price hasn't left this channel as I've defined it, it's still there, and this channel persists, I guarantee you there'll be a fork that appears in it with anywhere from 1 to maybe as many as 4 of those swings, of which there are 5, depending on how you want to measure the whittle. 1, 2, 3, 4. There's as many as 1 to 4 touches will appear on your fork, on the median, on the lower parallel, somewhere in there. When I have a fork that has appeared, let's say I have that fork and I came to the chart after all this had happened. For whatever reason, I wasn't here to draw all these forks. I didn't draw the mini forks. I came to the chart somewhere in here. Oh, I missed the scan. Woe is me. Sound like Eeyore. Well, thanks for asking. I now can use this scan to draw a future fork. And what I say, and what I taught just again a couple nights before this, was every time you have a scan that appears on your chart and it completes, it's moving out of the D, and you did not take that trade, or whether you did or not, it's not relevant. You don't have to take that trade. You need to come in here and draw a fork on that CD, and immediately, if you have the ability, take it back to the X. We just taught that. I just taught that. So there's nothing random about that fork. And it just so happens that as the data started to populate, there was nothing. There was one touch here. It retreated from it and then breached it, but there was one really good touch there. You'll notice too in the construct of that swing that I did have a Fibonacci touch there and a Fibonacci touch there, the median touch. Normally I can't count those as touches in terms of making the rest of the fork viable. And I didn't have any trades. Remember, let's pretend I didn't take the D, but I did draw my CD afterwards. Okay? So now what happens is there's no trades in here. This wasn't the kind of, that would have been a trade, and it would have been short-lived. I would have gotten out positive, but it would have been short-lived. I didn't make any boatload of pips off that. Up here, it's too high. I didn't have a trade coming down. There's nothing else in here that gives me a trade. But where does this scan now give me a trade? It gives me a trade from my C swing high, because I know about this check, this gap and check. These gap and checks are very powerful on all support and resistance, as long as they're single lines. That's a to the pip trade. And boom, you're in there. As my once coach used to coach and friend said, in there like swimwear. No comment. Right? So, there you go. And then, of course, by the time it comes up here, not only does this triple energy point stop it, but it gives you another trade in the opposing direction, for which money management takes over. And again, minimally, you're going to make that amount of pips. You don't get this full part, it's going to have to erode against you. But nothing magical about this. Is not a forced scenario. This is not going back to something and recreating the best thing I can possibly create from the circumstances. This is from this point on. Whoops, let me erase that. That is from this point on, from the time this swing occurs, I need to have a fork on this chart. My initial setting, as I said, would have been that swing as a traditional, but when this thing retreated, I would put more faith on that bounce than I would this low. And so I move my fork down or up, whatever. It would be a move up from the low here, be a move up to create this touch, and once I have that, I'm good to go. And then of course everything else fell inside that. There's no magic here, guys. There was no randomness. It was just drawing your forks as price marched forward. And when you do that, magic will happen with pitchforks. I call it chart woo-woo. Call me crazy. I'm probably the only educator at IML or maybe in the world that talks about woo-woo on the charts. But I will show you the woo-woo in the charts. It's magical. And if as long as you are consistent with what you do, pitchforks combined with scans are the highest probability, the lowest risk, and the highest yield. There's just nothing else that can compare. So for you guys that are not part of IML, or if you're part of IML and you're not yet with me on pitchforks, and you're not fully using your scan, if all you're using your scan for is waiting for the D and hoping that works or doesn't work, you're missing out on probably 20 times the pips. Because not only do we catch this D, we catch it with 1/10th, 1/15th, 1/20th the stop loss, which means we're making 10 times the profit. We catch trades before the scan even paints. And then after the scan, we catch trades with pitchforks. This orange pitchfork still prevails. We have a new green pitchfork. We have lots of opportunity for trades in here. Okay. So we're a little different breed. We combine it all. Scans, forks, and fibos, hence the name of the group. If you're an existing IML trader, you need to jump on scans. That's pretty easy, you know. If you're not on pitchforks, you need to jump into my IML TV session, scans, forks, and fibos. Right now it's Monday, Wednesdays at 9 p.m. Time may change at some point. If you're not a member of IML, you have to be sitting. I have to, and again, I'm not some aggressive sales guy. That's not me. I show an opportunity. I educate you because I'm an educator. You have to make an educated decision. Is pitchfork something I want to pursue? If it is, you have two paths. You can go get the course that's labeled in the pinned post. You can join IML. Plenty of good team leaders in here that will help you grow once they know you're their team. They will help you grow. So just contact me. I'll be able to set you up in that. If you're not in IML and you're interested in combining pitchforks and scans, then again, IML makes sense because you get training on both. You get the world's best training on pitchforks, voila, moi, and you get the scanner. So now you could fully use the support mechanism in this group because this group will support at the highest level, the advanced level training that are done with scans, forks, and fibos. If you want to just sit back and casually figure out what you want to do, there's no pressure. There's absolutely no pressure in this group. From time to time, you will see me make some sort of post. Nobody else. Time to time, I'll make some sort of post. Just say, hey, you're missing out if you're not part of IML. That's not really salesy. That's just a fact. Because if you're not part of IML, for the most part, you're not getting any of the trades based off that scan. Not the power trades. And if you're not taking my pitchfork class at a minimum, which you get free within IML, you're going to have a hard time learning forks because you need the instruction. So, look, there's 3 people in the group, IML members, non-IML members who trade the Forex, and people who just aren't sure what they want to do. And again, we don't discriminate against, I don't know who you are. Half the people in here that are IML that post stuff, I don't know they're in IML, unless they say so. Once in a while we'll ask because they're pushing the envelope and they might ask a question that I know was covered in the training. So then I know, hey, I know where you got that question from, it's because I taught it. So I know they at that point they might be in IML. But for 90% in Tim and Steven and Zoe and Theo and Adam are the same way. They don't know, unless you identify yourself, they don't know whether you're in IML or not. We're here just to help people advance themselves. But I will tell you, we're only going to be able to help certain people who also advance themselves. So we help those most who advance themselves. That means investment in time, and that sometimes means investment in money. But let me say something here about that. None of the stuff we're doing here is the stuff I grew up with. When I grew up in trading in the Forex from 14 years ago, most of your Forex courses were $5,000, $3,500. Fly down to Miami for a week. You had hotels and food and everything else, and still paid $3,500 for that week intensive boot camp. Nowadays, IML membership, $145 a month, 100 whatever it is, 95 up front, $145 a month for the platinum membership. If you don't want to do IML, I think you should. but at least there's a pitchfork course there. Couple $100 and you're done. So you have options. It's not that we discriminate, but we're not going to teach what IML teaches in this session, in this group. We're not going to do that. And those of you for looking at it aren't being real world, you know. But we'll support you the best we can with the knowledge you have. I think that's fair. So anyway, a long video, longer than I anticipated. But I felt a little empathy, for the question that was asked this morning about, were there pips in here? What's the end game? Did you actually catch any of this? Or isn't this all just random and you're going back and making things look good? I understand where that comes from. The way the industry is being marketed today by many people. But as the IML traders will tell you, and look, if you recall me saying every time there's a swing low, to draw an upward fork, if you recall me saying every time you go to a new high, inside that fork, outside that fork, draw a new fork and keep drawing them as you move forward, if you remember me saying that, just do me a favor in the comments said, yeah, I remember him saying that. You'll understand then there's nothing random about this. This is just the progressive nature of what a pitchfork drawer does. And in the midst of that, as I said in many sessions now, you will magically see scans appear inside your pitchforks. And you'll get direct hits on 1 to 2 to 3, sometimes 4 sides of that scan. All right, I'm going to conclude it there because I don't want this to be a 5-hour session, which I can easily do. And plus, I have a IML TV session tonight that's pretty significant. So, got to rest my voice and get some notes together, and got to get some other stuff done too. But I hope you got something out of this video to open your eyes just a little. If so, let me know. Okay.